Assalamu alaikum and a very good evening. Today is 9th of January 2025. On behalf of NCM Global, NCM Financials UAE, NCM Investment Kuwait, Noor CM Academy, and NCM Institute, I would like to welcome you all aboard. Thank you so much for your participation and attendance today. Before we begin, I always say this in my session. All right. Now the presentation, it's up to you. If you want me to speak and present formally as per our official method, it will only take 20 minutes or 30 minutes maximum to teach you and introduce you to our learning content today. But if you really want to gain value, if you really want to learn something, if you really want to make your trading journey easy and enhance it further, the presentation, today's training session can maybe go more than 45 minutes. I do understand it's a weekend. Everybody wants to spend time with their friends, family, for them, and have fun. And the weather's also very good in Kuwait as well. So you tell me, please, tell me in the chat box right now, do you want me to finish the whole training program in 20 minutes, or you want me to take time and teach you everything slowly so that you understand? How shall we proceed? You can write in the chat box. 25 minutes. Thank you, Mr. Murali. Thanks for confirming. What about others? I don't usually keep on talking in my presentations. I keep things interactive. I want everyone to engage. So great, Mr. Mohammed Asim, Mr. Peter, that's great. Thank you. Thank you so much. Now, before we begin, let's get to know each other. Where are you attending this webinar from? Where are you? Which country you are in? What's your name? What do you do? Dubai, that's great. We have a gentleman from Dubai as well. UAE, Mohammed Asim, welcome. Praveen Joseph, great, welcome. Dubai, Rufus as well. Mr. Peter, Kuwait, welcome. So we have people from Kuwait and Dubai. Great, welcome. All right, so we're going to proceed further. The first 5 or 10 minutes are going to be a little bit boring. It's going to be more of introduction. It's going to be more of a theory. Okay. Later on, from theory, we are going to move to the technical part. Then from technical part, we are going to transition into practical part. Great. Nice to have Ms. Manar from Kuwait as well and Mr. Sajjad from Dubai. Great. All right. So the first 5 minutes are going to be a little bit boring, but it's okay. Just relax. If you're sitting on the chair, just relax your back. It's my job as a trainer, as an instructor, as a teacher, presenter, to make sure whatever we discuss today, you're able to understand them. I will not personally end the webinar before any question is answered. No questions will be remained unanswered. Okay. My name is Mahsin Khan. I'm the head of Noor CM Academy's learning and educational wing. So I take care of the learning and education of the investors and our clients. Financial trading. What is financial trading? In easy words, trading is nothing more than an act of buying and selling. Okay? It's an act of buying and selling. Online trading is just like any other business that you can think of. Today, if you want to start any business anywhere in the world, whether it's the Middle East, it's the United States of America, Asia, wherever, $50,000 is a capital that is required to start and initiate any business. If you have access to this kind of amount, you can start a business anywhere in the world. Good economy, bad economy, best economy, doesn't really matter. Okay. But business, of course, it has the risk element attached to it. There is risk. There's all kind of risk, financial risk. Physical risks are also involved, emotional risk. We'll talk about these slowly. Now, to start a business, you have to go through a lot of stress, hassle. You have to find a location. You need to buy inventory. You need to recruit professional people. Maybe you pay for marketing expenses. You pay for recruitment expenses. Then there are government fees, procedures involved. right? But it's okay, it's fine. Businesses do work, they do become successful, and do also fail. But when you start a business and you're starting with $50,000, what was your effort and how long did it take you to acquire that 50,000? It's a huge amount. It's not really accessible easily to all the people, right? So, online trading is also a business. My laptop, if I'm trading in my mobile phone, my tablet, my iPad, okay, all of these, if I'm an online trader, they act as a shop for me, they act as a company, they act as a business system. All right. Now, online trading, it doesn't really require a lot of money, and it does really not require expensive telephones, expensive laptops, expensive computers. A simple i3 core laptop with a processor can help you with trading. Now, to start your trading journey, there are some basic requirements. What are these basic requirements? For beginners, if you're totally new, it is preferred. It's not necessary. It is preferred that you do have a laptop or computer, because the trading platform our company uses is MetaTrader 5. MetaTrader 5 is available in multiple languages. It's easy to use. It's simple. It's free. There's no hidden charges. There's no inactivity fees. There's no renewal fees. It's available on mobile version, web version, and the PC version. But in PC version, you have more advanced options and you can do a lot of things. We will talk about it. Okay. Now, before we proceed further, let's go through a disclaimer, and I'm going to enlarge the screen and I'm going to request you to confirm with me. Can you all see the PowerPoint presentation? Today's webinar is about learn simple supply and demand zones trading. I'll teach you few methods on how to trade with least amount of stress, with least amount of time being involved. We're going to talk about a lot of cool stuff. You're going to learn how to draw supply and demand zones in a very easy way. We'll talk about money management, and we will also see and check, is it possible to make money even by being wrong? Can I be successful or profitable even if I was wrong? We're also going to check that, and we're also going to test that out. And if you stayed at the end of till the end of the presentation today, I'll share additional methods which are not part of the official training program. Okay. But before we begin, let's go through this disclaimer. Take your time, take a few seconds, go through it. Financial trading, like any other business, it's a very risky business. Anything that touches your pocket, touches your wallet, is risky. Please do not invest money that you cannot afford to lose. Do not invest your children education fees, your car rental payments, your credit card payments, your mortgage payments, your medication expenses. Okay? School fees, no. So only invest money that you can afford to lose. Only use a budget that you can afford to lose. Try with small amount, but go through the disclaimer and we will proceed further. Okay. So NCM Group, we are headquartered in Kuwait. We have several branches. We are also going to cover for you how to avoid scams, huh? Right? We're going to talk about it. Let's talk about it. NCM is a Kuwait-based financial broker, financial services provider. We are regulated in each and every country we have presence. We've got an office in Dubai as well. In UAE, it's a physical office. The people are there. People are physically present. You can visit. You can meet. You can ask questions. You have problems. You can solve them there. NCM Financial Services is based in United Arab Emirates here, and we have an ESCA Category 1 license. We are fully regulated. In Kuwait, NCM is regulated by Capital Markets Authority of Kuwait. And we have even branches in Turkey, in UAE, and in Malaysia. And we're opening more branches in the future. Okay. Now, there are two types of traders. If you want to write it down, go ahead. First type of traders are called retail traders. Retail traders are people or individuals who do not really have an influence in the market. People with small trading accounts, people with few less than $1 million. Okay. Thanks for confirming, Mr. Zahid, Mr. Peter, and Ms. Manar. Thanks for confirming. Okay. So there are two types of traders. The first type of traders are called retail traders. These are individuals with normal trading account sizes. They don't really have an influence in the market. But the big boys, the big sharks, the elephants, these are the second type of traders. We call them institutional traders. Institutional traders, who are they? These are central banks, state banks. These are private banks. These are investment brokers. These are the people or entities who inject trillions or billions of dollars on daily basis in the financial markets to create movements. Okay. Now, most people, they don't really understand why and how does the market move. We're going to talk about it. Okay. Now, first of all, if the price goes up, what does this mean? We have to understand the price movement. We have to understand the price behavior. Okay. If I see that the price is going up, do you know what this really means? If the price is moving consistently towards the upward direction, it means the buyers are in control. Who are the buyers? Buyers are the traders with maximum buying power. They have the money, the fuel, the fuel, the injection that the market needs to continue moving towards the upward direction, okay, is fresh injection of cash. When new money is being poured, when new money is being injected in the markets, the prices start going towards the upward direction. Buyers are people who move the prices towards an upward direction. They push the prices up. That's the reason the markets go up. Another reason, or to say it in another way, markets go up because people are greedy. When people are greedy, people start buying, people start spending money, people are greedy, prices start to go up. Also, another important point, important step, when the market is uptrend, it's bullish. That's also used. We use words bullish, we use words long. Okay. When the markets are in uptrend, you will also see that the green candles or the positive candles, their quantity will be more and their length will be bigger as well. The green candles in an uptrend or a strong buy trend, their quantity is more and their lengths, their sizes are also big. Okay. Is it clear until here? Why markets go up? Because buyers are in control. There are more buyers. People are greedy. People are putting money. The fuel that the market needs to continue moving towards the upward direction is fresh injection of cash. So please let me know. Is this point clear? You can let me know in the chat box. If it's clear, just write clear. Where's everybody? Clear. Thanks, Mr. Peter. What about others? People, I need evidence that you're awake. Thanks, Mr. Prasan. Rufus, Praveen, thank you. Great, great. Thank you so much. Okay. Now, why do the markets go down? By the way, here I'm telling you that there are green candles more, buyers are more active, right? Also, one of the signs is in an uptrend, if the market is in a strong uptrend, the red candles will be less. Short sellers, people who drop the markets are called short sellers. They're also called bears. In an uptrend, the quantity of red candles is less. Even the length of the red candles is weak. If we look at this right-hand side on the chart, if you see here, look at this. We are here in an uptrend. Can you see? The green candles are more and their sizes are big as well, whereas the red candles are very less and they're quite compressed. They're small, they are weak. Bigger length of the candles means buyers are strong. Okay, small sizes of candles means if they're red, sellers are weak. And you can see when the market went up and it started to come down, red candles increased, their sizes increased, and the green candles, their formation was a weaker one. See that? Green candles are no longer large in size and their quantity is also less. So the reason market went towards upward direction because the buyers were in control. How you know? There's green candles, they're increasing, their quantity is increasing, size is increasing, and greed is the one that is pushing the markets towards upward direction. Why does the market fall? The market falls when there is fear. The fear can be due to any reason. It can be economical news that the country or this product is not doing well. If it's a fear, maybe it's bad news about the company's performance. If it's a currency of a country, it means the economy of that country is maybe not doing well. That's the reason. When there is fear in the market, people start pulling their money out. When people start pulling their money out, it means they're taking the money and going away. Going away means buyers are leaving. There are no buyers. And when the buyers start to leave, the price start melting towards the downward direction. You would see red candles increasing in quantity and sizes, and you'll see sharp moves, the price dropping like crazy. All right. So far, we've learned what are the type of traders. We talked about institutional traders, and we talked about retail traders, institutional and individual. Then we talked why the prices go towards the upward direction, what's the concept behind it, and why they fall. Okay, I'm trying to keep the language as simple as possible. Okay, so now let's move. You know, big players are the ones who move the markets, banks and investment firms, right? In business, how do you make money? How do you make money in a business? It's you buy low, you buy you buy low and you sell high, right? Or you buy cheap and sell expensive. You buy cheap and you sell expensive. That's the simple way of how business works, right? But what if you wanted to buy cheap but you couldn't? What if you bought expensive? If you buy anything expensive, you have to sell it more expensive to be profitable. Okay, buy cheap, sell expensive, or buy expensive and sell very, very expensive. Is this clear? The people, the entities who make these crazy moves happen in the markets, okay? A place from where a strong up move starts. A place in the chart, you can write this down. If you want to write the definition down for future references, write it down. What is a demand zone? We're going to talk about demand zone. Demand zone, I'll give you a difficult definition first. All right, give you a difficult definition, and then we'll talk about the simple and easy definition, okay? Difficult definition. Demand zone is an area where the smart money traders are lying, Lying, okay? Supply is an area where institutional traders are there to drop the prices. Forget the difficult definition. We'll talk about the easy definition, okay? Demand is an area demand is an area in the chart where a sharp move happens towards the upward direction, a sharp move, a big move. Supply on the chart is an area where a sharp move towards the downward direction happens. Easy definition, is it easy? Okay, now, which charts are better to draw these levels? I will show you how to draw, and we'll also talk about the examples, and I'll even use the trading platform. Okay, so demand, once again, demand is an area where a price makes a sharp move towards the upward direction. Supply is an area where the price makes a downward move sharply towards the demand zone. Okay, so it's buying low and selling high. Now, let's go further. Okay, now there's a difference between supply and demand zones and resistance and support. Most people, most trading gurus, they say it's the same, but it's not. Financial markets, especially the currencies or gold, they are usually sideways. It's like table tennis. It's like a ping pong ball. Okay, the ball, it has to come to point A and go to point B, and from point B it has to come back to point A. It's usually sideways most of the time. Currencies, that's how they behave. Okay, but it's just an area of inflection from where the price bounce. Okay, but demand and supply zones, these are totally different. These are only places which create sharp moves. You can see, here's the difference. You can see we have a chart on the left hand side, there's resistance, okay, and there's support. On the right hand side, we're not going to go through these stuff today. Today is part 1. Part 2, to learn part 2, you can, if you're a client, you can visit our office. We will announce it on our social media pages and on YouTube channel when it's the next training program. It will be done in person. The Dubai office will handle for Dubai staff, Dubai accounts, and in Kuwait, we will handle the Kuwait-based people. Okay. So, sorry, I was coughing. Now, let's go. Let's go to the MetaTrader 5 trading platform. I'm going to open the trading platform. Now, the important question, which charts are good? Which charts are better for drawing the supply and demand zones? Do you have live trading sessions? No, not really. We will have them in the near future. We have, it's under review. We might have live trading sessions very soon. Okay. So let's go on our trading platform. Let's see. Okay. Important question. The important question is, which charts are best to identify and understand supply and demand zones? The preferred ones are 4-hour and a daily chart. Okay, they are the preferred ones. 4-hour or a daily chart. You can zoom out. You can zoom out. This is the MetaTrader 5 trading platform. We are not going to cover how to use it in today's session. You can go to our YouTube channel, okay, and subscribe there. This is our YouTube channel. We do have a lot of videos here. We have a lot of educational content. It's available in English language and Arabic language as well. Just go through this, okay, and you can find out how to use the trading platform. The tutorials are all there. Okay, so you zoom out. Can we see from where a sharp move happened? We have this area. What does this area mean? Here, we had a sharp move that happened towards the downward direction, right? So you go on your trading platform, you would see a rectangle. You can just mark this area, the candle from where the drop start, you can mark it. Okay. All right. Is the session being recorded? Thank you, Mr. Vijay. Thanks for raising this. I believe it is being recorded to record longer meetings. All right. I don't know why this happened, but we will check it out. But no worries. We'll try to fix it. All right. So here's where the sharp move happened towards the downward direction and the price fell drastically. And then we saw this is an area from where a strong move happened towards the upward direction. So we have marked our supply and demand zones from the chart. They don't have to be picture perfect. They don't have to be really that accurate. Now we know where the price had started its fall and collapse, and from where it started to go towards the upward direction. This is a gold chart. We are using gold, and it's a 4-hour chart. Now, can we have more than several supply and demand zones? Yes, of course, we can. So do we have more? Let's check. We need a sharp move. This is another sharp move that happened from here. Okay. We are marking these. I'll give you something easier as well. Okay. So don't worry. Don't overthink about it. We're going to make things simpler as well. Just take it as it is for now. So do we have any other sharp move that happened towards the upward direction? You can see this here, this candle approximately. These are our supply and demand zones. And even here, this area. Okay. So now it's easy for us to understand and identify how we want to trade. We'll talk about money management and risk management as well. We'll talk about it. Okay. So any questions so far? Do you have any questions you want to ask? We can take questions right now as we speak. You can ask questions in the chat box, or if you want to speak over the microphone, you can ask. It's totally fine. I'll unmute you. Do you have any questions for me? We just learned right now on how to mark supply and demand zones. Preferred time frame is a 4-hour chart or a daily chart. 4 hours also okay. If you want to use a shorter time frame, if you want to use something like a 15-minute chart, you can also do that. But my suggestion and my preference is draw your levels on a bigger chart, like 4-hour chart, then change the color of the box, and then you can mark other levels as well. For example, here, this is from where another price collapse happened. It's from a 15-minute chart, right? So what you can do here, now I'm switched to 15 minutes. I can just change its color so that I know that this is a short-term supply and demand zone. You know, I can even mark this one here. Can you see that? Is all time frame supply and demand? Yes. Yes. All time frames. But I see 1 hour is okay, 15 minutes also okay, but not on 1 minute or 5-minute chart. You won't find supply and demand zone on, but the concept, the method works. It does work on that. It does work well. Okay. Cool. Great. It's good to have questions. It's good to have questions. So this is our supply and demands. We have drawn this. What's the purpose? How does it help? Here's how it helps. Let's go back to the 4-hour chart. Let's go back to the 4-hour chart. How to trade it? How to trade it? Always, you have to use pullbacks. What is a pullback? What is a pullback? We'll use this example. We'll use this example here, okay? Let me get a drawing tool here. What is the purpose of using different time period charts? I'll explain that. Mr. Murli, I'll explain. Let me just explain this thing. I'll answer this for you. All right, everyone. I want you all to focus here. I want you to focus here. We had a sharp move from here, right? We know this is supply. Sorry, this is the demand zone, and we know this is supply zone. Okay. So the market, it always moves in symmetry. What do I mean by that? What is symmetry? The market doesn't go straight up and it doesn't go straight down. It doesn't go straight up like this. It doesn't go straight down like this. It always goes in symmetry. It goes like breathe out, breathe in, breathe out, breathe in, breathe out, breathe in, breathe out, breathe in. And same, breathe out, breathe in, breathe out, breathe in, breathe out, breathe in. Right? Let's suppose you missed a trade because not really everybody knows where the market is going to go. Okay. So you saw that market made a strong move around this area. It made a strong bullish move starting from this area. This is a big move because you're using a 4-hour time frame. What you really want to do in this situation, what you have to do is when the price goes back, goes towards the upward direction, you also know that this is the ultimate zone here. This is a sharp move from where it happened, okay, from where the collapse started, including this and also this area as well. from here the sharp move happened, right? So now when you buy, let the price slowly, the keyword is slowly. Let the price slowly come back to this zone. Let it come back to this zone so you can buy. Instead of buying here at expensive places or at the breakouts, let it come back a little bit. You can buy and hold it until it starts to go towards the supply level. That's how supply and demand zones work. This is an example for buying. Let's see an example for selling. In the past, you can see here a sharp drop happened. Market dropped very sharply from this area, right? Okay, market went down. Now the market should come slowly towards the same drop area. And you can see when it came here, it took a strong fall. All right. Is this clear? This is the simplest way and the easiest way to explain supply and demand zones. Now, 4 hour is used by people who are really busy, who don't really have enough time to follow and monitor the markets. They don't want to spend too much time on the markets. But those who really want to be actively engaged in the markets, they really want some action, they can use a shorter time frame. You can mark additional boxes, okay, and you can use them for your trading decisions. Okay. Now, here, if you see, in the past, the market dropped from here. Then it came back up. There are multiple reasons of supply and demand. Multiple supply and demands on the chart. You see that? We had a collapse from here. Here you can see, let me clean the chart. Let me clean the chart. Can you see this place? Here. We saw, this is the first one, right? From where the collapse happened. Can you see that? The price, it dropped 2 times. It came around this area. It was an opportunity to short sell. This is almost like 270 points. It came back here at the same area. It gave you a couple of chances to make decent amount of money. And can you see here quickly? Just watch at this area. A sharp move happened here, right? Can you see that? This is a sharp move. If I mark that as well, you can see that when the price dropped, it came back to the same area and reversed back towards the upward direction. Can you see that? Same thing happened here. We had a sharp move. The price dropped and it kept dropping from this area. Can you see that? This area, when it started to take falls, right? Can you see that? Same thing even happened at this area. Sorry for the drawing. Okay, you can see that it came back, it dropped. It came back, then it dropped. What about the current situation? What about now? What about now? Can I draw something? Some sharp moves that happened? Yes. This one here. This is a sharp move towards the upward direction, right? I can mark this zone also as a demand zone. And you know what? It completed. It did finish here. Strong move happened. The price dropped. I can buy. It would be an aggressive trade here to buy. But the problem is, remember what I told? You need the price to come slowly towards the downward direction, not like this. This is a huge fall. This is kind of an invalid setup. You don't need a strong fall like this. You would hit a stop loss. Okay. And then when you buy in this zone in a proper way, okay, you can exit at next area from where the price fell sharply. Where did the price fell sharply? Do we have any place on the chart? Yes, we do. Can you see this? Here, from this area, right? From this area and this area as well. So this is a sharp drop, and this is also considered as a sharp drop as well. Okay. You can see that the price started to drop from here. It came here. then it went back up, and within this zone, it gave us chance to short sell. Here also it gave a chance to short sell, but with, of course, stop loss, probably stop loss. It depends how you place your stop loss. We're not talking about the stop losses right now and how to place take profit, but this is one of the most easiest way. Now you can even use this concept not only on gold, you can even use on other markets as well. The currencies are most of the time, the currencies are cyclical. They are range bound. They do not really trend all the time. So you can even practice hedging. You can open a demo account, go to ncmfinancials.com website, you register there, open a demo account. Here is a 15-minute chart. You can see here it's more fun. Here it's more easier to understand. You have a sharp move from here, right? This is your kind of a sharp move zone. Okay, do we have more? Do we have more stuff? Then from here, you have a strong move towards the upward direction. See that? A strong move happened around this area. Can you see this one? So a strong move happened upwards, then it collapsed. It gave you a chance to enter, to take a buy. This is what happened. Prices move usually from each supply and demand zone to another one. So this was the first move. It went towards the upward direction. The price is trying to go in the upper box, but not. We have a second drop. You had a second drop here, right? What did we discuss? You want the price to come slowly towards this level. And guess what? It did come here and it fell. It went and then it fell by 74 pips. Okay. Do we have more stuff? Do we have more stuff? Yes, here. Can you see a sharp move? Can you see a sharp move that happened here? Where did it start from? It started from this area. What happened when it fell? It slowly came towards this zone and then took a drop. By default, you even have a supply and demand zone here because a sharp drop happened towards this direction. Okay. And you can even see this is an area or zone from where sharp move started, right? You can even mark these zones like this. Okay. And again, they don't really have to be that perfect. You need to have an idea. Can you see? The price went up to supply, it came back to this demand and it tried to push towards the upward direction. Okay, this is one of the most easiest way to trade, and you can even hedge. If you're using very small lot size, open a demo or practice account of $1,000 and with one micro lot, you can even place a buy trade here. If it goes up, you close and place a short sell. If it goes, you can hedge again. In the advanced upcoming webinar or advanced, we'll have a workshop on supply and demand, practical workshop where we'll show you how to place trades with what quantities available. Okay, we'll teach you what lot size to use, how to hedge, how to get out of the hedge. What if you're stuck? How to get out when you're stuck? They will be completed in our level 2. So any questions in regards to supply and demand zones? Any questions? Thank you for staying. Thank you for bearing for that long. We will, of course, cover more things. We will cover a bonus strategy, that bonus method I promised. Okay. We'll cover that. Sure. Sure, Mr. Rajat. Yes, Mr. Rajat, go ahead.
I said very good evening. So
A
I
very
have
good
been
evening.
I'm looking in the market with supply and demand zone there. So basically, I'm looking to do better on trading. Like most of the people are doing on gold only. But I'm looking to do better on other assets and with some specialized experience assistance on other like forex and other things there. If some
Okay.
option is there with you, maybe with live trading and understanding the things better.
Oh, you mean you want to know more on advanced level, right?
Basically, I've been following supply and demand for approximately a year now.
Uh-huh.
But uh, basically, sometimes in entry level and take profit levels and all that needs to be more. Because uh, I have been trading in gold only with some other person help there, so I'm looking to do better in my other things also.
So what you're
Forex.
saying is you want to improve your current experience of trading with supply and demand to set proper stop losses and take profit levels, right?
Yes, please.
All right. Okay. This is a bit advanced because we have a blend of beginners and intermediate traders today. Okay. My suggestion is the gentleman who invited you to today's webinar, who spoke to you, who gave you a call, just coordinate with them and ask them on what's the procedure of having free one-to-one session. You can ask them to, you can give my reference to them. Just if you want to learn from me, you can just call them and tell them to schedule a session for you. Okay.
So I just got an email. Maybe I had somebody has spoken to me before. So somebody, I just got an email for because I was trading in supply and demand. So I thought it better to check with you. How was it?
Yeah. I'm happy to be of help. But best way to get a one-to-one session on supply and demand. You want advanced stuff, right?
Yeah, basically for entries and etc.
Yeah.
Because
Just the
charge.
person, the gentleman who's in contact. Is anybody in contact with you from NCM?
No, sir.
Nobody.
Yeah.
Okay. You're based in Kuwait or Dubai?
Dubai also.
You're based in Dubai. Just give them a call. Just give them a call. You have the number?
No, I don't have, sir.
Here, this is the number. You can take a screenshot. Just give them a call, give them your name, email, and to ask them to schedule a advanced session for supply and demand for you. Okay.
Thank you.
All right.
Thank you, sir.
You're welcome, dear. If there is time, maybe I will try. I'll try my best to give you some tips on how to add accuracy and precision to your supply and demand trading. Okay. What is the purpose of using different time frames? This was a question asked by Mr. Murali. The purpose of checking with different time frame is to get a bigger picture of the market, to see what is the overall trend. You want to be with the trend when you execute a trade. If I go on a daily chart, here, let me just delete. This is the concept is same for each and every trading pair. On the daily chart, I can see that the market, the euro has been crashing. It fell down very hard. It tried to go upward in the upward direction. It tried to complete the uptrend. It could not complete the uptrend. It started to melt again towards the downward direction as well. And as per daily chart, a strong up move started from where? It started from this area, from this box. Me personally, here, I'll show you. From this area. Where is the square? Where is the rectangle? Okay, from here. This was a strong up move, right? So this can be my level of supply and demand and place from where it can reverse. So do we have more? Now I'm using a bigger chart. I'll tell you what's the reason. A strong move even started from here. It started from here. It did start from somewhere else as well. It even started from here as well. Okay, so this is the daily chart. Now what do I know? What do I learn from this information? Like I can say that this lower area, this whole area below is a cheaper area to purchase euros, and here it's an expensive area to purchase. So it's better to buy the lows. I can wait for this area to come. I can wait for this area to pop up so I can buy, but at the moment it's a strong downward direction. When the price slowly comes to this box, you should start seeing positive or green candles coming in, and then you will use a smaller time frame, a smaller chart, to get a better accurate entry. The larger time frames are used for identifying the overall trend, the overall important zones, where are they on the chart, and you would use a smaller time frame to get more trades, to make your entries. And then you can also know, okay, I'm in the cheaper zone, so I shouldn't really short sell the resistance levels or short sell the supply areas, because the market can go up. It's very cheap. I should prefer to buy, have a bias of being in the buy side rather than going for the short sell side. You can see we can't zoom out enough, but we found this level around daily chart, right? Maybe if you go to a 1 hour chart and we zoom out, you can see now the pressure towards the upper direction has started to increase. It was down, but the green candles, their quantity increased, this length increase, it started to come towards the upward direction. Now, the 1 hour chart, I can mark my supply and demand areas here as well. Can you see this? Where did the sharp move start from? It started from this area. Can you see that? And now the market is having difficulty, okay, to continue falling towards the ground. It has been lying here for several hours. How many hours? Since last 30 hours, it's floating in this area only. Of course, there are fake breakouts as well. Okay, it's part of the game. Okay, but do I have more? But at the same time, you can even see this is where the whole game, it started from this area. See this? This is a much preferred one. So most traders, what they do, they wait for the price to come in this zone. What would the traders do? Many traders, they do stuff in different ways. First, one of the ways what traders do is, because we had a question right now, okay? They would, this at the end of the box, at the top of the box, they would place a buy limit orders, okay? And below, they would put a stop loss. Okay, this is one way. Put a buy limit order. If it's hit, it comes here, it's hit, it should go back. Where should it go back? To the supply area. Where is the supply area? This is the supply area. Okay, some people, now again, keep in mind, never invest more than 1 to 2% in one trade. Do not invest more than 1 to 2% in one trade. What does it mean? If you have 1% risk on your trade, you have a $1,000 account, you're risking $10. And how many times, what does 1% mean? It means if you are risking $10, you can trade 100 times. The reason why people lose money, I'll tell you what are the important reasons why people lose money. It's not because the markets are wrong or markets are bad. It's due to lack of proper education, lack of proper knowledge, lack of proper practice. At NCM, we offer free demo and practice accounts so that whatever you're learning today, you can even practice them out. These are the main reasons. Spend enough time, do enough practice one thing. If you like gold, stick with gold. You like euro, stick with euro, but don't try to do 2 3 things at the same time. I cannot be doctor in the morning and engineer at night, right? These are some important reasons why people lose in the financial markets, and they don't sometimes even use stop loss. So don't invest risk more than 1 to 2% in one trade. So here you can have one trade only, but sometimes what do people do? They split their risk. They split the risk. Like they would take a trade here, okay, then they will make layers of the trade. They will break down trade. They'll break it down, of course, with a stop loss as well. If you use stop loss or you don't use, that's your choice, but it's better to have a stop loss to cover your risk. So in case if the market came down, it would open one order, it would open two orders, it would open three orders. Maybe it will then push towards the upward direction and you capitalize on this larger move and you bought something at cheaper price. You can close this one which you bought at the expensive price. There are many ways to do money management here. Okay, this is a sample idea or sample way of how to make an entry. I'll give you, this is called layering. Okay, this is called layering. I'll show you another thing here. For example, this was an area to sell. Okay, I could have created layers here. When the price comes here, one cell is here, second cell is here, third cell is here. I can put even fourth, and I can put a stop loss above the previous high. All of these trades will have a stop loss, and when the market goes up, fills, it comes back, I can, of course, it does backfire. Okay, now there's an important table I want to share with you. I want to share an important table, then we'll go for the bonus strategy. This is an important table. I'm going to make the screen large. My suggestion is take a screenshot, print it, and make yourself a trading corner in your house, in your bedroom, not in the dining room, so guests see that you're into financial activities. Keep your trading space private. Just print this paper and stick it on the wall. And now I'll explain. This is called risk to reward ratio. 1-to-1 risk reward ratio means if you have $100, or let's say $10, you are risking $10 to earn $10. Think of it as a coin toss. We do a coin toss. If heads, you get $10. If tails, you lose $10, right? If you have a trading strategy that has an accuracy or winning percentage of 1-to-1 risk, 51%, so for you to be profitable, if you use 1-to-1 risk reward ratio, you need to be right 51% of the time, and the market will either go up or it will either go down. With 1-to-2 risk reward ratio, out of 100 trades to be profitable, you need only 34%. In our previous lecture, it's explained more decently and in more details. You can go to our YouTube channel and watch there as well. Do subscribe and check our other videos. In 1-to-3 risk reward ratio, most traders, they only prefer 1-to-2 or 1-to-3 risk reward ratio. On 1-to-3 risk reward ratio, you need only a winning or success rate of 26%. I'm risking $10 to earn $30. If I lose $10. If I win $30. And after in 100 trades, I just have to win 26 times, not more than that. I might do a separate video on this table, and I'll upload on the chart on our YouTube channel. You can even watch that. Okay. So, any further questions before we go to the bonus strategy, bonus method? Do you have any other questions? Clear? It's clear. Okay. Who's ready for the bonus session? Let me know in the chat box. Who is ready for the bonus session or bonus strategy or bonus method of trading gold? Mr. Prasant is ready. What about others? This is something that you like. This is something that you'll enjoy. And I'm sure you're going to practice that as well. Mr. Murali is volunteering for everybody. Ms. Manar, great. Rufus, Rajat. Okay, let's start. Now, thank you for staying until the end of the training program. Mr. Abdullah as well, Mr. Milan. Great. Bonus session. Focus, pay attention, and listen to me very carefully. This is something called the trend trading strategy on gold. I'm going to teach you something cool, okay? Now, look, let me show you something. Gold is one of the most fastest moving trading product. It moves very fast. It moves very crazy. Whatever I'm going to say right now, it's just my personal experience. Do not take it as financial advice. What I'm going to teach you right now, how you're going to use it and implement it is your responsibility, and you yourself are liable. Okay? Now I'm more. First of all, you see these vertical columns on your MetaTrader 5 trading platform? These columns, these represent 1 day. They represent 1 day, 1 trading day. And now look here, you should understand, first of all, what's the personality of gold? How does this trading product move per day? You can see here, if I take now randomly from here to here, gold move almost 270 points or 270 pips, whatever you want to call it, or $27. I like calling 270 points. Gold moved 320 points. Gold moved upward 262 points. Gold moved from here, 390 points. It moved from here, 310 points. So we have an idea that gold, if it moved, it would move almost 300 points in a day. That we understand. This is now clear. Okay. Now, I need a good strategy. People love scalping. People love day trading. They want to get in, get out fast. They want more accuracy. They want more precision. They want to be excited. They want to feel. They want to be actively engaged. This method I'm going to teach you, it's also doable on the mobile phone, on laptop, and it's easy. What do you have to do? You need 1 minute time frame. You need a 1 minute chart. If you have knowledge of support and resistance, it's going to help you a lot. If not, I suggest learn support and resistance from our website or from our YouTube channel, or you can even browse. Okay, so go to a 1 minute chart on a gold chart. Go to insert indicators, go to trend, and go to moving average. Take a screenshot so you don't forget the steps. This is what you need. Insert indicators, trend, moving average. You need to add 3 moving averages. You're gonna add 3 moving averages. And what are the values of these moving averages? You're going to add a 50 moving average. You can color whatever you please, whatever you feel, whatever you wish. Add a 50 moving average. Then you go to insert indicators trend again. Add a 100 moving average. Okay. Go ahead and add that. Then add a 150 or 200 moving average, up to you, whatever you prefer. Go for this and let's make it 150. Doesn't matter. You can make 20. Okay, I'll write the combinations for you. Do you want me to write the combinations for you? Do you want that? I'll give you the combinations. You have 25 plus 50 plus 100. Okay. Then you have 50 plus 100 plus 150. Then you have 50 plus 100 plus 200. No problem. You can use any one of these. Doesn't really matter. Okay. 50, 100, and 200. These are the important combinations. How to use them. Now let's go on how to use. It will be only used on a 1 minute chart. Okay. The money management rules, I'm going to give those to you as well. Okay. Watch very carefully. First of all, keep in mind, when the pink line, when there's a crossover, this thing that's happening here, this is called a crossover. All right, this is called a crossover. When the pink line is going above the green and aqua color line or blue color line, this is called a buy cross. If the prices are above, sorry, Milan Pathak is requesting you to stop AI comparing these features will be stopped. Smart recording. Deleting, no, decline. All right. So when we have a buy cross and the prices are above these moving averages, they're above these technical indicators, it means that the market's in towards the upward direction. If we have a sell cross, if the pink line crosses below the aqua line, it means this is a sell cross, the markets will start to go and trend towards the downward direction. How to trade this? The question is now how to make money with this. How could we do that? Most traders, I'm using the word most traders, how they use this method, what they do, this is the way. First of all, they need a buy cross. Second of all, what they do, because the buy cross is valid, because this buy cross is valid, they want the price, they want it to go inside the moving averages. Let me change the color here. Let's change the color. They want the price to go inside and close above the moving average to take a buy trade. Pink refers to what unit? It refers to 50. 50. Okay. You can keep any values you wish. I've given the combinations earlier. Okay, let's say I want to keep this 200. It's fine. Okay. So when the prices, they should pull back. Let me show you what I'm saying. I'll draw it for you. These are your 3 moving averages. Example. This is just an example. Okay. These are your 3 moving averages. What do you want? What do you want here to happen? What do you want here to happen? You want the price to go up. Okay, you want it to pull back in the zone of these moving average. Think of it as an alligator. This is a crocodile or alligator's upper lip. This is the upper lip. This is the tongue, and this is the lower jaw. You know, so you want the market to come inside the mouth, and when you see a candle closing above, this is the values are 50, 100, and 200. Okay. Excuse me. You want the price to close above to take a buy and go above to close that buy. So prices come down. Try a 50-point stop loss or a 50 pip stop loss on a demo account. Give it a shot on a demo account. I'm not inducing you. I'm not encouraging you. Just give it a shot. Here, when the price comes back in, it closes above 50 or a 100 moving average, you would take a buy, you would place a 50-point stop loss, place a 20-point, 40-point profit target 1, profit target 2. This is one of the most easiest and scalping method that is available. We'll look at more examples here. Let's mark more examples. Let's mark more examples. First buy. Oops. You have a first buy here. Then you have a second buy here. Okay. You have a third buy. You have a fourth buy. Can you see we are trying to catch the whole trend? Fourth buy. Then you have a fifth buy. Sixth buy. Can you see that? How it's working? When these moving averages, they become straight, like moving average should be trending. They should be like this. They should have an angle. Can you see that there's an angle, there's a deviation, they're pointing upwards. But if the moving averages are straight, they're just straight, it means the market is not trending. This is a trend trading strategy. When you have a sell cross like this one, you have a sell cross, it means whenever the price pulls back in here, it goes back in, you would short sell. It comes out, you'll place a stop loss above the 200 moving average or at 50 points, you'll take a short sell. It goes back inside and comes back outside, you short sell. This is the most easiest way to explain. If you did not understand this method, you can ask me again. I will clarify and simplify it further for you. All right. So is this method clear? Does it look much more easier than drawing and marking your supply and demand zones? There are multiple examples. You can see markets performed very well. Of course, profits and losses, they go hand in hand. It's part of the game. Risk management is something very important. Do not risk more than 1 or 2% per trade, so you have better chances of success. So I hope you enjoyed today's webinar. Let's have some question and answers. These are some methods. We'll mark more. Example, the price comes in this zone. You have a buy trade here. You have a buy trade here. You have a buy trade here as well in this zone. You might get stop out here. It's totally fine to get stopped out. Not an issue. You had a buy trade here as well. Okay. So do we have more stuff? Here we get beaten. We hit our stop losses, but you shouldn't, because we just discussed if the moving averages don't have an angle, they're straight, you shouldn't execute trades. Okay. Then your new buy cross forms here. There's some distance. You take a candle closes above these moving averages. This is your buy trade as well. And this is the most simplest, easiest way. And I hope it will help you. I'm done. Thank you so much for attending today's class and today's session. Please feel free to ask me questions. If you want to learn more, you want to have advanced sessions, you want one-to-one coaching programs, training programs, one-to-one educational programs, just feel free to contact our office. And once you become a client, you have an active account with us, you are entitled and eligible for having free sessions, even on one-to-one basis. Thank you so much for your participation. Thank you so much for your attendance. And I'm here, I'm on standby. Please ask me questions and I'll answer them for you. I'll do my best. So any questions, everyone? If you want to come over the microphone, just ask me to unmute, just raise your hand. I'll unmute you. You can ask me questions and and we're good to go. So any questions? If only pink is used to determine buy and sell, what is the purpose of marking other two colors? Great question. A single moving average technique is a different thing. In a single moving average, what you're doing is you're depending only on one technical indicator and you don't have multiple or additional confirmation. You're depending on one thing only. But when you add multiple moving averages, you have a short term, medium term, and a long term moving average. Their cross, it helps you in identifying the shifts that are going to happen in the trend. Okay. If only pink is used. So I hope, Mr. Murali, I have answered your question. Can we use Heikin-Ashi for currency trading? Of course. Yes, you can use Heikin-Ashi. You can. For those who want to be taking least amount of risk, you can practice on currencies, especially like the pound dollar. But if you want action, you want to be engaged, you can practice gold as well. Thank you, Mr. Rajat. Sure, looking forward to meet you as well. Mr. Murali, I was saying a single moving average is just taking a confirmation from one technical indicator only. But when you have two additional moving averages, which represent medium term and long term picture, okay, they add accuracy and precision to your trading method. Okay, great. All right. Any other questions, people? Mr. Money, Miss Nathaniel, Miss Manar, any question? All right. Shall we end the session? Great. Great. Thank you so much. Shall we end the session today? I'm going to count till 5. Thank you, Mr. Praveen. Thank you so much. All right, everyone. So 5, 4, 3, 2, 1. Thank you so much. This session was recorded and it will be uploaded tomorrow on our social media channel, especially on the YouTube channel. And please do subscribe to our social media channels. Do also visit our office if you have any queries, and we'll keep on bringing more exciting webinars for you. And we do, when we upload the video, do share your feedback. If you have even questions, you can even leave your questions on the video as well if it's something that you didn't understand. Have a great evening ahead. It was really nice to see people here attending our program from different places in the GCC. Have a great evening. Take care. Wish you a lot of good health, success, and wealth, and all the best with your trading career and journey. Always trade with a regulated broker. You should trade with a broker that has a physical office. You should, take care of where you're investing. Do not fall for companies or financial schemes that are not regulated, and there are no physical offices available to visit as well. Good night and bye for now.